Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 2142nd edition of Short Term Trading, live with Oscar Carboni, where I will teach you the art of technical analysis, how to view these charts, and how to see where the market should go next via technical analysis. So, this video, the 2142nd installment of these educational videos, coming at you on a Thursday night for Trading Friday. That is July 31st, 2020. Risk is inherent in trading futures, options, stocks, ETFs, you name it. If you trade it these days, the risk can be extreme. Never trade without stops. Please know this is not suitable for all traders. You could lose way more than you think. You could end up in debt, owing a clearing firm by doing something that you are unaware of in the futures or options market. So please know the risks and never, ever trade without stops. Let's get moving. This is for trading Thursday night through Friday, 7/31/2020. We're looking at the Russell 2000 Daily Bar. You've seen this in many videos. This is interesting. First battle with the 200 bar moving average, meaning the market was underneath it for quite some time. Approached the 200 bar moving average, this thing right here, approaches it. 4 days later, it is underneath it and on its way down. We get back to it again, failure. Not even close, down. Very close, failure. This time we get above it. And do you know how long we have been battling this time with the 200 bar moving average? 12 days in a row now. 4 days it was already history. On day 3, it started to get ugly. By day 4, you were already back below that 200 bar moving average and on your way down. You have now got 12 running days in here. And look at how it's bouncing off of this channel. Bounce, 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 bounce. Failed at the top. Failed here. Right? Almost here. So you got a decent parallel channel. And failures, well, holds here and failures at the top. The hold, I think, is good. So I am going to go with buying dips in U.S. indices. Another reason why I would say that is this. Now, traders, before we get too far into this, let me just say my apologies for another one of these videos where I'm not out in front of my camera, but literally, and you could ask the Omniacs who are in my trading room every day, a live trading room, livewithoscar.com. Being that I mentioned it, no credit cards, no nonsense, live trading room, just create a new username and come join me at livewithoscar.com. Anyhow, I have been climbing through an attic in Las Vegas, my attic in my roof. It is a crawl space attic, completely insulated, 111 degrees outside. Lord knows how hot it is in that attic. I have been in that attic almost every day this week. And I have to tell you, it's Thursday. I just don't have the energy to get in front of the camera. My apologies. You know, my trading room understands this. There's been an issue with one of my units on my roof, and I've got to go up there and show it to people and blah, blah, blah. But in any event, just wanted to mention that to you. So, what I would like to mention on this chart, which is your Tesla Zondak daily bar, is that repetitive patterns tend to repeat. Now, where have you heard this before? Have you not heard this every time I've shown you this chart? And here's why. Not only are we bouncing off the channel every time, look at that crazy bounce. Every time bouncing off the channel, but it's also doing this at the same time. Look at this insane thing that's taken place in the NASDAQ. Months ago it started. I've shown this to you many times. Look at the average and the channel and the bounce. Into the average and the channel, then the bounce. Average, channel, then the big bounce. Average channel bounce. Average channel bounce. Average channel fight going on here, but nice bounce as of Thursday. So I've got a green Omni in the NASDAQ, basically a neutral in the Russell. I think I'm just going to go with buying the dips in U.S. indices for Friday. Stops will be in first, and we'll see where that goes. So remember, repetitive patterns tend to repeat. Why? Because repetitive patterns are literally the cornerstones of technical analysis. You wouldn't really know what to gauge anything on if you didn't recognize repetitive patterns. And then from there you analyze those patterns. So repetitive patterns tend to repeat, obviously enough, which is why this is here. It's almost facetious. But repetitive patterns tend to repeat, and then from there you can do analysis off those patterns and see if you're supposed to hold, buy, sell. But that is basically the cornerstones to technical analysis. Traders, thank you so much for tuning in. Please join me in my free trading room at livewithoscar.com. If you do not know where to buy and sell these markets, the Omni office trading recommendations, they have been unbelievably successful this year. Join it at livewithoscar.com. Come to the free trading room. Ask for Dano. I will type that just to make it quick. Ask for Dano in the live trading room. I'll make that cap so you know who I'm talking about. And that didn't work. Ask for Dano in the live trading room at livewithoscar.com. He will assist you in how to receive the same Omni trading recommendations that we're using to get in and out of these markets each day. Traders, I would like for you now to make sure you always use technical analysis before you make trading decisions. Never, ever trade without a stop. Ever. A stop is something that knocks you out of the market and stops you from losing, even if you freeze and don't know what to do about that. So in other words, let's say the market is going against you, you're in a cab, you're in whatever, an Uber, if anyone even drives them anymore with unemployment the way it is. You're in a situation where you cannot do anything about it. Market is tumbling down, your shares are tumbling. A stop will knock you out of the market, and guess what happens? You live to fight another day. That's the purpose of putting your stops in first. So always put your stops in first and make sure you are here and you live to fight another day. The next thing I'll tell you is make sure you keep your emotions out of trading. One of the best things you can do to keep those emotions at bay, and I know it's not easy, stay the hell out of Tesla's on deck so you don't go broke right away. And say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll traders, thank you so much for tuning in to livewithoscar.com, and I will see you in my live trading room.